In this lecture, we're going to be talking about crowd behavior. Now, more specifically, we're going to be talking about market sentiment and contrarian investing. So, everybody knows that when you're trading the stock markets, it's a zero-sum game. So, for every winner, there's a loser. And also, everybody knows that most people are wrong. Okay? Because you have a lot of people who are wrong and lose money, and a few people who are right and make a lot of money. Okay. Now, you have to understand that when you're trading stocks, it's a game of supply and demand. Okay. So if you're looking at, and let me just get out of this, if you're looking at a stock, if you're looking at a stock that everybody says, that stock is amazing. Let's say we're looking at a company called, DRN. It's a company that's manufacturing new drones, and everybody agrees that they're amazing. Everybody says that they're the best company ever. Everybody thinks it's going to go up huge. Every single person you've met, okay, says that this is the best stock. It's on CNBC, it's on Yahoo Finance, on Google Finance. Everybody's agreeing. Would that tell you that this stock is more likely to go up or that it's more likely to go down? Why do prices go up? Prices go up because people buy them, and by buying them, they're pushing prices higher. Now, if everybody's telling you they love that stock, what that tells you is that they've already bought. You don't care about people who have already bought. What you care about is people who have not bought yet, who want to buy. That's what's going to push prices up. Now, if everybody already bought and there's nobody else left to buy, well, at one point, these people are going to have to turn around and sell the shares that they previously had, right? So there's going to be pressure from the sell side. But is there going to be pressure from the buy side or not? And that's what we care about. So if you go, somewhere and everybody has only good things to say about this company, well, and they're all telling you that this is a buy, well, that means they've already all bought. And we know that they're going to have to liquidate at one point. So there's going to be sellers coming in at one point. And that there's not really anybody left to push prices higher because they already have their position in. So when everybody's agreeing that it should go in a direction, it usually tends to go in the opposite direction. Okay? Because if everybody's already long, again, they're gonna have to sell at one point, and there's gonna be selling pressure. And if there's not more buying pressure that's coming in, new buying pressure, it's not gonna go up. So one thing that I like to do is I like to use the website StockTwits. And on StockTwits, you can see the sentiment for a particular stock. And again, the sentiment here, the market sentiment, is basically the feeling that people have towards that stock. Okay, the sentiment could be either bullish or it could be bearish. And again, when we're saying sentiment is bullish, means that people think it's going to go up. Bearish means they think that it's going to go down. And, the reason they call it bullish is a bull, attacks from the bottom up. And that's why they say it's going to go up. And a bear attacks from up to down. So bearish. So if you want to know if the market sentiment is strong or weak, all you can do is, let's say I want to check Apple, AAPL, just like Twitter, but for stocks, right? You can follow a particular stock. Okay, let's see Apple. Okay, well, for Apple, you can see a lot of people posted and it would say if they're bullish or bearish. And then on the top right, you see the price. Well, you can also see the message volume, how many people have wrote about it. You see that more recently, a lot of people wrote about it. And that's probably because of the new iPhone 10 that just came out. But then if you look at the sentiment, this is the sentiment. That means that out of all these messages, out of these 11,818 messages, 66% of them are positive, people saying it's bullish, and 34 are bearish. So that's nothing too strong in either direction, right? But sometimes you're going to see that a stock has like 95% bullish. If your stock has 95% bullish, everybody thinks it's amazing. Well, is it really going to go up more, or has everybody already bought? So if you're in a long position and everybody's so bullish about it, well, maybe it's time to get out because it's done, right? There's not going to be another push. And in the same way, if you want to short a stock and you see that everybody's bullish on it, well, that means there's not going to be a lot more buyers to push it up, and it might start going down. So it might be a good position to actually start shorting. And that's what brings us to contrarian investing, right? Contrarian investing is some type of trading where you want to trade against the crowd. So if everybody's going long, you do the opposite. If everybody's shorting, you actually go long. So doing the inverse of what everybody's doing. And again, it's based, and this is something that works a lot, and a lot of big money managers are contrarian. They do the inverse of what the most people are doing. And again, most people are wrong, so it just makes sense. And most people are wrong because when everybody's doing the same thing, well, then prices are going to revert at one point as they get out of that position. So contrarian investing is extremely logical, right? And it uses market sentiment to gauge what is the contrary of the public, right? Because when you're doing contrarian investing, well, if you want to do the opposite of what everybody else is doing, but then you might tell yourself, well, you know what? Maybe everybody else is also doing the opposite. So maybe I should do the opposite of that and not be a contrarian. And it gets, inception kind of thinking. So to know what everybody else is doing, well, you look at the sentiment. How are people feeling towards it? Okay? Because you got to tell yourself that people who feel a certain type of way towards a stock is because they already have their position in. Otherwise, they wouldn't feel so strongly about it. So contrarian investing is something that you're going to use market sentiment for. And it makes absolute sense. Whenever, and again, me working in a property area and owning a trading company, I get a lot of people telling me about tips or telling me, hey, this stock is going up, this stock is going down. Every single time I get a phone call and somebody tells me, hey, you should buy, this stock is going up, I literally short it right away. 20 or more than 20 messages I have at least during this year where people tell me, hey, you should buy this. And the same moment I get the message, I actually short it. Why? Because I know if by the time this guy who's not super savvy in trading got this information, he was the last person to receive it. He's the last person on the train to push the stock up. And there's not going to be anybody left to push it up. Your objective is to buy before other people bought, not after. Buy before other people bought. And once they bought, that's when you sell. And that's why, a lot of people like doing contrarian investing, because when everybody else is selling, they're buying, and then everybody buys, they're selling, and they make their money that way. So, very, very important concept to think about, think about it a few times. And you're going to see that in most of the things we do, we kind of use those. So that being said, if you have any questions regarding this or any other, lecture we have done, write us a message and I'll get back to you 100% sure. Other than that, I'll see you guys in the next lecture.